Hello, my name is Yuya Shimizu, the CIO of Hibiki Path Advisors, a boutique investment company that invests into Japanese attractive mid to small cap in the aim to unlock the value that has not been recognized by the market through our engagement with the management of those companies. So this is actually our first attempt to create a video presentation to explain to investors on our ongoing actual case that we are invested and doing an engagement with these companies. So if you're interested, please come to see our website, hibiki-path-advisors.com, where there's a library of our past and present cases shown there. So today, I'm going to talk about our new exciting engagement campaign to Kawai Music Instruments Manufacturing. Code is 7952, a very beautiful small piano company that is listed in Tokyo Stock Exchange. But first, let me start with a quick 2 minutes on who we are. Here's the slide, introduction, Hibiki. So I created this company in 2015. I own the company majority, and my partners own some portion. We invest in these small gems, hidden gems in Japanese companies. And the word hibiki, as some of you may know, can be translated into English as a harmony or resonance. And it is my ultimate goal to bring a strong and value-creating resonance between our investors and our investee companies in order to achieve maximizing of shareholder value as well as happiness to the people who work in these companies. The investment philosophy is quite simple as written there. I would say it is we like simple and good businesses that are overlooked by the market for various reasons. And we want to work together with the management to unlock these values and create the value together. So that's our basic stance on investing. So now we move on to the name, Kawai. We have written a letter to this Kawai's management, to the board, and we have just recently publicized it so that all the people in the market can read and to understand the situation. But before we go into details, I'd like to hide my face and let my voice guide you through the presentation so that viewers can just focus on the content without being distracted by my face. So here we go, let's start. So here's the summary of the Kawai. It was founded in 1927 and now approaching its 100-year anniversary very soon in a few years. And it has its effort to educate Japanese people on this music was monumental alongside with their friendly competitor Yamaha. And this Kawai, unlike Yamaha, has continued to focus mainly on acoustic piano on their businesses. The chairman and CEO is Mr. Hirotaka Kawai, who has been the president of this company since 1989. He is the third generation of the Kawai family. And this Hirotaka was the guy who was extremely supportive of creating this strong brand of a Shigeru Kawai piano series. This Shigeru Kawai has started in 1999 and it is very well known globally. And we'll touch on it later, but it has become more famous as many people in the 18th International Chopin Piano Competition used in the final rounds of the competition. So the brand value is actually increasing dramatically these few years. However, let's look at the market. It is about 3,000 yen per share, and market cap in US dollar is about 200 million. It's a small company. Looking at the valuation, price to earnings 7 times, price to book 0.8, and return on equity is 11.2%. Actually, the business is not bad, but the valuation is very, in our view, quite cheap. So let's look at the theoretical valuation first. We look at the value, then we look at the business, then the brand, then the issue that is causing this disconnect about the fundamental business value and the stock price in the market. So this is our estimated intrinsic value of Kawai's business. We use a very simple DCF model with 1 free cash flow, 1 discount rate, and we just come up with the value using this simple methodology. And what we view is 5,240 yen. It is actually 70% higher than the current price. We have actually outlined the details of this calculation in the letter as well in order to explain to the company. So if you're interested, please go into the letter and read it by yourself. We are happy to engage in more deeper discussion with any of you who watched this video. Then the business side. You can see this slide, gross profit margin historically. And we can see that in around March 2015, gross profit margin started to recover dramatically. Now, this has been supported by basically 2 factors. One is, so Kawai has 2 major business segments. One is this piano and music segment, and the other is material segment. This material segment is actually extremely profitable. It is making semiconductor related ingredients as well as the painting of all these automobiles. This segment has started to recover from 2015, and now its operating profit margin is around 15%. It's a small business. It's about 1/6 revenue size of the piano segment, but it is a very great synergy business that has been created by the technology of piano manufacturing. Starting with that segment's recovery, also the piano segment started to recover around 2017 and 18, and combined recovery in these operations has led to a dramatic recovery in the operating margins. So, in fact, one of the very big reason or factor that has contributed to the recovery in the margin of the music segment, piano segment, is the growth in the overseas piano. So in this slide, page 7, this shows the overseas piano revenue of Kawai in US dollar basis. So they sell piano not just in Japan, in China, Europe, and North America, as well as these Asian countries. So in 2015, it was the bottom of overseas revenue, and then it has recovered steadily. And if you look at the March 2022, it has risen dramatically. And for example, China revenue has risen about 50%. North America, Europe market, both has risen about 20%. So why this sudden increase? We view as there's 2 background here. One is, of course, the work from home during the COVID time. People wanted to do something and they started playing piano. That's probably one of the reasons. But the other reason also very interesting. We go to the next slide, and this is actually what we believe as a big reason of the increase in March 2022. So in October 2021, this 18th International Chopin Piano Competition has been held. And because it was during COVID time, it was broadcasted globally with a lot of excitement. And of course, two Japanese contestants, Mr. Sorita and Miss Kobayashi, actually made it to number 2 and number 4, so people were very excited in Japan as well. But an important news for Kawai is that within the 12 finalists that has made up to the final round, usually, obviously, for the piano selection, Steinway wins because they're, of course, top of the brand and their sound is extremely gorgeous and it's very strong and very wide dynamic range. But this time, 3 people who chose Shigeru Kawai actually made it to the final round, and especially Mr. Gadzhiev, Alexander Gadzhiev, has won number 2 prize alongside with Mr. Sorita. And this Mr. Gadzhiev actually also used Shigeru Kawai in his Hamamatsu piano competition in 2015. He is essentially in love with the soft and human tone of this Shigeru Kawai grand piano series. So, many of you might not know the brand of this Shigeru Kawai, so I will just made a brief price comparison of the highest ranked pianos among Shigeru Kawai, Steinway, and Yamaha here, and actually show this in the letter as well to explain for the to the management that this should be recognized by the market. So I have converted this into Japanese yen, but the top end Shigeru Kawai brand SKEX is selling at around 34 million Japanese yen. This is very close to the top end brand Steinway, which is 37 million, and actually higher than 30 million yen of Yamaha. Interesting story here is that in this 18th Chopin piano competition, 6 people on the first round chose Shigeru Kawai as compared to 64 people of Steinway. Steinway is the choice if you don't want to take the risk. If you want to be in the sort of the center line, you just choose Steinway. And Yamaha also 9 people chose Yamaha. However, nobody made it into the final who picked Yamaha, but 3 out of 6 people who chose Shigeru Kawai actually made it into the finals. This is pretty amazing in our view. However, so now this is the interesting part. Let's look at the valuation of Kawai. In the slide number 10, I showed shareholders' equity and price to book, the historical trend. And you can see that shareholders' equity has been growing nicely, compounding its value steadily over the past, and it is also expected to grow further in the future. However, if you look at the price to book multiple, we can see that recently it has come down to the lowest level in the past 15 years. Similar with slide 11, EBITDA and EV/EBITDA multiple. EBITDA has been growing, well, a little bit bumpier than shareholders' equity, of course. But then, if you look at the EV/EBITDA multiple, although the profit has been growing quite nicely, EBITDA has come down to the lowest in its history. So, market has not really been appreciating, first of all, the growth in the business, the quality of the business, and lastly, the increased brand recognition and the brand value of Kawai. So there's some problem here. We just summarize the valuation in page 12. And interestingly, the third bullet point, something people should know. In 2013, the top of the brand Steinway and Sons was acquired by a hedge fund, Paulson, at a value at the time of 14.5 times EV/EBITDA. And even the Kawai's direct competitor, Yamaha's 5-year past historical average EV/EBITDA is 12.2. And Kawai is trading at less than 3 times right now. So Steinway's value at 2013 compared with Kawai right now, it is almost like completely incomparable. Then in slide 14, Kawai versus Yamaha 5-year valuation. We just take average of the 5 years. Then it's also quite incomparable. So why this is happening, we want to identify, and then we have put out our view of the solution to overcome this significant disconnect between the intrinsic value and the market value. But before that, in the letter, we also touched on Steinway. Based on these 3 angles, profitability, brand value, and about China business. We are very surprised that Steinway has been growing their business extremely well. Very good business management, also very good vertical integration using M&As. But one thing that can be mentioned here, which is also very interesting, is about China. So in slide 16, we've made some comparison of their revenue in China. So in 2021, Steinway, in Japanese yen basis, sold 12.4 billion Japanese yen, as compared to Kawai's 15.9 billion. Interesting, right? In US, of course, Steinway wins by a big margin, but in China, interestingly enough, Kawai sells more piano than Steinway. So there might be some thing here that Kawai should also analyze deeper why they're winning in China and make that strategy much stronger. So this is one of the proposal that we made in the letter as well. So let's now go into the proposals we made to the management of Kawai in our letter. So we identified 3 issues for this company. One is investor relations. The strategy of those investor relations has been very outdated and unfortunately doesn't deliver the greatness of Kawai as a business and a brand. The second issue, their balance sheet is very healthy. Their positive cash, net cash, but their payout ratio has been quite low, total payout ratio especially, compared to its peers. So financially, it is not being paying out sufficiently to the shareholders. The third is that they are still continuing the anti-takeover measures. So I'll just touch briefly on those 3. Number 1 is about IR. One of the things that we've touched is that, as you see here, they have a really good brand website of Shigeru Kawai. It expresses the Shigeru Kawai world very nicely. But one issue is that even in this Shigeru Kawai site, there's 2 different sites for unknown reasons. And then second issue is that this brand site is completely unlinked to the IR side of Kawai. Kawai's IR site, it only expresses very basic information about their earnings and numbers. That's it. So our suggestion, because they're such a small company, it is a little bit difficult for large institutional investors to start buying their shares. So why don't they use their global piano fans as their supporters to become their investors? So our proposal is to combine the PR and IR effort and focus on retail investors domestically and also globally. The proposal number 2 is pretty simple, as laid out in this slide 20. The total shareholder payout ratio, which is the sum of the dividends and the share buybacks. We just compare this with Yamaha and Kawai. And Yamaha actually, excuse me, has been very friendly to shareholders. Their payout ratio guideline is about 30%, dividend payout ratio guidelines, and they also have 50% guidelines for total payout ratio, which actually includes the share buybacks. And if you look at this chart, since 2017, they have been paying out on average 70 to 80% of their net income, except for this COVID period, of course, in 2020. As compared to that, Kawai's payout ratio is around 20%, and they have not been clear on what kind of payout ratios they're gonna use for their future. And we believe if they want to increase their fans and fulfill their value to be recognized, they should think more about raising their payout ratio to their shareholders. That's our proposal number 2. Proposal number 3 is the anti-takeover measure. So we've written a little bit about the history that in the past, during year 2015 through 17, there has been some unfriendly shareholders suddenly showing up on their shareholder register. The first is Samick Musical Instruments, suddenly becoming 10% shareholder, and we don't know the background, but as the price soared in 2018, the Samick just sold their stake. And also, in the same period, some custody account at HSBC has become a major shareholder as well. And in 2017, the music distributor based in Hong Kong, which is one of the largest distributors in China, became a large shareholder. Interestingly, this Samick and Parsons seems to be a very aggressive business owners. And Samick, for example, acquired over 30% of Steinway's parent company, and Parsons actually acquired 2 old and well-known German piano manufacturing company in 2013 and 2015. So we are not sure of the background, but we can understand the company is a little bit worried about the shareholder structures. However, this is from the general market participants' point of view, is a very strong discount factor, because we are not sure if the management is maximizing the shareholder value being protected by these anti-takeover measures. And so that is what we have mentioned in a letter to the board of Kawai, and we will keep engaging with them to unlock their value and also to make the market recognize their true strengths in the capital markets as well. So the summary is here, slide 22. First of all, in our view, Kawai has a very strong global recognition in their piano brands. There's no question about this based on their achievements, especially in the recent Chopin piano competition. And as we have seen, the earnings has been on the right track for the past few years, even during the COVID time, and of course the brand value is rising. However, as we also have seen, the stock valuation is at the historical low now, so there's significant disconnect. And in the letter, we have expressed it very straightforward that we are here to support Kawai to achieve the correct recognition in the market. And in order to achieve that, we disclosed this proposal in public so that all shareholders and market participants can read and assess about what we have been mentioning, and also discuss with the management their views about what should be done here. So if you're interested, please go to our website, hibiki-path-advisors.com. There's an engagement section in this website. And also, this is only in Japanese, but we disclose these campaigns in the website Hibiki Investment News, and we tweet our campaigns in the Twitter as well. So this is basically the campaign to Kawai this time, and we look forward to more engagement with Kawai, as well as introducing more case studies to the public through this video presentation. Thank you very much for watching our video, and see you soon again. Bye bye.